but you don't see these small signals as an average investor because you can't possibly read that much news,
Right.
filter all the junk, filter all the opinion out, right? And that's where the AI comes in. It does that for you. And then you find things like little juicy tidbits that you didn't even know existed.
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. Today, we're going to talk about AI and investment research. We have Andrew Einhorn. He's the Chief Executive Officer and co-founder of LevelFields.ai. It's an AI-driven fintech application that automates arduous investment research so investors like me and you can find opportunities faster and easier. His mission is to create AI tools that make advanced financial strategies effortless and accessible for all. How you doing?
I'm good, Mike. Thanks for having me on the show.
Good. Yeah, thanks, Andrew. I always start with a little background. Who are you? Why? How'd you get into this AI? And where'd you come from? And how'd you get started with LevelFields?
Sure. Happy to dive into it. I've got kind of a traditional background. I actually started my career as an epidemiologist. So I was tracking things like mercury contamination in the Gulf, and in Pittsfield, Massachusetts, on former GE properties. Got really good at data analysis, statistical analysis, started to consult, went to grad school, worked for a public company through their IPO called ICF International. Big government contractor. They do kind of like a lot of science and engineering consultations. So I worked with, groups like FAA Office of Commercial Space Transportation, analyzing orbital debris and horizontal space launches, and what basically became the laws for SpaceX to follow and others on the commercial side. Worked for NASA a little bit on the environmental group, creating metrics for them, monitoring systems, and then eventually was working for the Pentagon and was building a environmental safety and occupational health event and risk management system, the technology platform. And so I took something that was off the shelf and started to customize it for DoD, and I just fell in love with building stuff. I fell in love with the idea of building technologies and sort of shaping the world to what I wanted it to be, and I found I was pretty good at it. So left that job, started a company that was about 2009. Ran it for 10 years, brought it from a napkin sketch to sale to a large private equity firm in 2019. And that company, what we did is we monitored events for publicly traded companies and their comms teams, their PR professionals. And so let's say, a company like a rail company might have a train derail, and it might happen at 2 a.m. The executives don't know. Usually it breaks on Twitter, then it goes to a local news story, then eventually it's national news. And so our software system would identify that event. So someone would take a photograph of the trains, in their pool in the backyard, and then that would go on Twitter. We could grab it at that moment, flag it, send it over to the corporate comms officer and say, Houston, you've got a problem. They would drum up their kind of PR machine and say, figure out what they're going to say. Like, oh, well, it was, the oil company put too much oil on it. That's why it flipped. Or the rail was never not maintained properly by the government, whatever. And so all these events, we serviced about 100 of the Fortune 500 companies, everyone from Exxon, Discover, ConocoPhillips, CSX, Rail, and others, as well as companies in the health side and defense contractors like Lockheed Martin. And so ultimately what we saw is this really positive correlation between events that were happening and their share price movements. So again and again, we'd be flagging these events. There was a cyber breach, stock would tank the next day, and then it would go up. And we were making, somewhere between $50,000 to $150,000 a year per contract for this thing. And at some point we started thinking like, maybe we should invest our own dollars on this. And we kind of kept that on the side, just like on the back burner. Ultimately sold the company. And then 2019, the whole group that founded the company and the technical group, we kind of reformed a new entity. We started playing around with AI layers on top of the type of data mining and big data analytics that we used to do to try to come up with new and interesting use cases. And then in the middle of building that, COVID happened. So we're kind of like experimenting with different ideas for the business, and then crashing over our heads was this ginormous event, just like other events that we were studying over the last 10 years. And it just became crystal clear that, as the market was selling off and people were very nervous about stocks, that we should take our expertise, kind of in event monitoring and analysis work and unstructured text, and transform that into a company that helped everyday investors or independent investors figure out how events are going to impact stock prices. And as we kind of pushed into that, we started learning that, much of the market is filled with a lot of opinion about stocks. What's going to be the next Amazon or Google, whatever BS article is out there for clickbait. And as we look through it, we said, there's a lot of news, but the news is driven largely by what the companies are announcing. And if we got to the heart of it, it was all just companies and events. And that was what was driving all the action. It was driving the share price movement. It was driving the narratives over the next, days and weeks, and CNBC and other outlets. And then it was driving the technical analysis that people were doing when they were looking at, momentum trades and coming in. And so we said, we can now, with this AI, monitor every single US stock in the stock market 24 hours a day, 7 days a week, and focus exclusively on events, and only events that are correlated to moving the share price. And we can ignore everything else and give people the opportunity to find those events that are 30% in a day, 50%. There's a couple of them recently that were 600% in a day, really massive transformational events that are happening when a company is emerging growth story, or on the other side of it, where they're just completely ready to fold and they're running out of cash and they file for bankruptcy. And so we built a system to monitor for that. And effectively what it does, it's like an AI speed reader. It's pouring through 30,000 documents a minute, looking for events, categorizing them, analyzing them, flagging them, and then building like analytical arrays of historical performance of those events, so that you get the effective output, kind of like a weather forecast. And you can say, okay, where is it raining? Where is it sunny? What temperature is it going to be, plus or minus a couple degrees, because what's the average temperature in April? And then you'd be able to know, here's the forecast. Like, this event happens, it affects it for a day. This other event happens, it affects it for a month. It changes, and you'd be able to see that on the application for the analytics. And so it takes a lot of sophistication to put that together. But on the other end, it takes very little sophistication to understand it, because it just shows you, hey, there's a big green bull here on the event. That's a bullish indicator. And you can see, that event typically moves the share price 4% in a day. You click a button, you get an alert, and then boom, off you go. You can trade that event, or you can use it just for longer term investing, or you can use it to sort of shorten your research. And so the idea that we have is really, can we automate investment research so that average person can watch the entire stock market without spending all day looking at charts and graphs and, pouring through different screens and having 6 monitors up? Like, the AI is doing all that for you. And you can set your specific goals and say, you know what, I like these types of events, but I only trade tech companies, and I only want companies that are large cap. So if these events happen with these companies, oh, by the way, I want to have a dividend of 1%. And then you click a button and you walk away and you go have dinner. And then you go, travel the next day, and someday at 2 o'clock, you'll get an alert that an event matched your criteria, and you can pop on for 2 seconds, make a trade, or adjust your existing portfolio, and then walk away again. We found that we're just massively taking, a lot of the time and effort out of it.
What I found is, I've been researching some stocks, and I'll use one example. And my question will be, once I give the examples, you probably look at biased and unbiased news, because both can affect, the stock prices. And it's so hard for me to, for instance, I just bought a Lucid EV. Half the time they're going to fold. Half the time, there's an injection, they're going to last. They're coming out with this, and this. And for me, it's like, okay, I love this car. Do I buy the stock? well, I click one video and then I have to do research on who this person is that's doing this video. Are they a Tesla junkie? And
Right.
they're going to talk bad about, the competitors anyway, and say that it's not going to last. So how do you look at, for instance, the Lucid, but there's just, it's both ways. There's biased people, there's unbiased. Do you take all of that and just say, hey, look, everything's affecting the stock price, whether it's good or bad, right?
We try to take all the opinion out of it. So we don't look at opinion at all. We just ignore those sources. We look
Mm-hmm.
at, the general philosophy is no one knows what's happening inside a company, with the
Yeah.
exception of a few corporate officers and, some high level,
Right.
right? So if you
Right.
work under that assumption, then anyone who's writing a blog post who doesn't work for that company is just full of it. They don't know what they're talking about. Right? Okay. And we say the same thing. We don't know what's happening there, but the executives do give you little breadcrumb trails of information to go off of. For example, the earnings every 4 weeks, they'll tell you what the revenue is, what the earnings growth, what their outlook
Mm-hmm.
is. Those are super helpful, but along the way, you get other tidbits of information. You get return of capital in the form of share buybacks or
Yep.
dividends. Are they increasing their dividend? Are they decreasing it? Are they
Mm-hmm.
worried about cash flow and they're selling assets off to build cash to pay off debt that they have, built up in the company? So as you see that, like the story begins to unfold as you look over time and you see, you know what, this company has raised its dividend, 6 times in the last 1.5 years. That's not an executive team worried about the future because they're giving away their cash. They don't need it for operations. So they're telling us a very, very strong signal.
Mm-hmm.
Hey, market, we're fine. We're doing well. Things are good. And those are the types of events that we grab and look at on the application. We don't need to hear about someone's video review because we already know this company's in a good cash position. Their earnings back it up. And then if you have a little bit of information on kind of the macro scenario, right, where if lithium prices are down, that's generally good for EVs, for example.
Mm-hmm.
So that builds on that tailwind story.
Mm-hmm.
You put that together really quickly and you can see, wow, yeah, this looks good. In other cases, we look at kind of a contrarian signal. For example, in the middle of COVID, every company was trying to preserve cash, right? We're all
Mm-hmm.
crouching in our homes and covering our, faces with masks, and no one's going outside and no one's spending
Yeah.
money, right? So most companies are freezing their dividends, right? They might be trimming their workforce. They're finding different ways to preserve cash because we could be going into a global recession, if not depression.
Mm-hmm.
And that was the view in like March 2020. But this one company started initiating a buyback program around the same time. And you look at that and you're like, why are they buying back their stock? Like, you have to be out of your mind to buy back your stock, or for some reason, COVID is good for them. And so when you see that, you look at it, what is this company? Well, they made and engineered and architected direct to consumer packaging for other companies.
Yeah.
All the companies in the world that could no longer sell their products through Home Depot and Target and Walmart on the shelf all had to design these little packages and send them to your front doorstep. This company designed and created and manufactured those packages. So it was like boom time for them.
Mm-hmm.
They were rolling in clients, they're rolling in cash, right? What happened over the next 3 years? The company went on to do 2,600% increase in its price from that day. And all of which you would have found if you just were monitoring some of these positive events. But you don't see these small signals as an average investor because you can't possibly read that much news,
Right.
filter all the junk, filter all the opinion out, right? And that's where the AI comes in. It does that for you. And then you find things like little juicy tidbits that you didn't even know existed, industries that I didn't know existed. We see those stories again and again, like when Russia invaded Ukraine, we saw a whole bunch of coal companies doing special dividends. And we were going, what is this? One company did like an $11 share dividend, which is like 8% of the company, from a yield perspective, right? In a one-time dividend.
Mm.
So you're looking at like, why the hell you can make 8% just by buying the stock, holding it through the ex-dividend date, and receiving that dividend. And most people would have to wait a year for that kind of return. Plus, they had a 4% dividend already, and they were doing buybacks. And you're like, what is going on with coal? And you quickly look, and you see 3 or 4 coal companies doing the same thing. You go, I wonder what's happening with coal. You type in, you see the price of coal had quadrupled or such. I forget the exact number it increased, but it was by a lot.
Yeah.
And the reason was when the Russians shut off the gas pipeline, the rest of Europe had to go and ignite their coal-fired plants to build the energy. And so all of a sudden there was a demand for coal again. So, you see these sort of counter indicators and indicators, and you can completely cut out the BS in the market, which there's so much attempt
Yeah.
at market manipulation. I mean, whether it's on Reddit or blogs or TikTok, everyone's trying to pump up certain stocks. And even in CNBC, generally billionaires don't come on television and give you their favorite stock picks for no reason. You
Yeah.
know, like
Right.
they're offloading it to you and trying to sell you on buying it. Like they need to sell 10 million shares, they need a buyer. So they're going to go on TV and say, this is why I love Coke and Pepsi. And then as they're selling Pepsi, you're buying it. So we wanted to get around all of that because we felt like the market was just unfairly rigged in favor of those who had access to the media, those who had access to the information, those who had 200 analysts at their disposal that they could go and say, hey, go study 25 different sectors and tell me, which sectors are going to do well or industries are going to do well when a big event happens like COVID. When we can do it now and we do it through Level Fields, our AI picks that up and it gives you an interface that looks a lot like going and getting a flight, right? So you just check in on a day. You're like, oh, what's going on in the market today? Here are the events, 25 different event types, all with kind of forecasted moves, bullish, bearish. You can see, what happened yesterday and how those events panned out. So it's very much reinforcing itself in that you don't have to distrust the platform because the numbers are right there. And if you want, you can just pick a small subset of like thousands of events that come through and just say, you know what, I really like this one type of event. Like when a company increases their dividend by a large amount, that's usually a bullish indicator. I'm going to buy that. I'm going to hold it for, 10 days, 2 months, sell it, make 10%, go and do it again and again and again. And we have all kinds of users. We have a lot of option traders, but we also have a lot of engineers and technical people that will kind of create their interesting ways to use the site and their own, automated webhooks and tradings in the backgrounds,
Mm-hmm.
using alerts. But one of the things that I'm thinking about, one user in particular told me they aim to make like a 0.25% a day, every day. That's all they want. But if you look at it, 0.25% per day, it's like 1.25 per week. You got about almost
Yeah.
5 per month, and you're at 60% per year. That's better than 2 times what the top hedge fund in the world makes.
Hmm.
And there's lots of different strategies that people employ on the system. And for us, it's more about accessing information and doing it in a way that's non-biased, that's data-driven, that cuts through the garbage that is just littering the web, when it comes to stock picking services and sites, and trying to find a different way to do things.
Mm-hmm.
So we do event-driven analysis, and that can be paired with fundamental analysis, which is also available on the system through the filters. And people who do technical analysis can pair it with what they're doing to understand why a stock is hitting a ceiling or a resistance level or going and gapping up and those types of things, because they're typically caused by events, which we track.
Yeah. And again, everyone's LevelFields.ai. And it seems like now you've created this AI for people like me that are just busy all the time, and I don't have time to. What am I going to do from 10 o'clock at night till 2 in the morning? Study,
Right.
and make my picks, because that's really what it takes. You can't just do a 5-minute thing, if you don't have any tools. So it seems like Level Fields is kind of taking all of that. We're in that, I call it the drive-through era, the fast food. We want everything quick. I don't
Yeah.
have, none of us have time to do a lot of research, especially when it comes to money. And LevelFields AI seems like it does that for us. Who is the perfect, who goes to your site? Who uses? Is it just individual people? You said you have some commodity brokers. Are you a brokerage house yourself, or is it just an AI platform for like day traders or people like that?
It's an information service, so we're not a brokerage system.
Hmm.
You have to make the trades on a different platform. In terms of, that type of people who use it, we have long-term investors, we have a lot of options traders, we have some day traders, we have a lot of swing traders. It's anyone that is not looking at like a 5-year timeline, although what we find is, if you think about asset allocation, right? You think like, here's my long-term investor, here's my 401k. I got my Apples, my Googles, my Amazons, whatever. I'm not going to touch those. I'm going to keep them
Hmm.
in. But you also need to have other types of investments, right? And so these would look in the kind of shorter end of the trading. Typically, you might have 1 day or you might have 2 years for your hold time,
Hmm.
and it's a different type of asset allocation. So we have a lot of folks that will put, 5, 10% of their money into this type of trading while keeping
Yeah.
50% in long and then maybe 20 in real estate.
Yeah.
And they break it up that way. It's really a broad base of users, get everybody who's from like people on Wall Street for 30 years that retired. Now they're trading on their own without their firm, to someone who opened a Robinhood account last year or 2 years ago and realized, oh, gee, I need an actual strategy to make money in the market, but I don't want to just sit there, for the next 20 years waiting to see if my Motley Fool picks are correct.
Yeah.
And, it's, and our philosophy is very simple. It's very difficult to know a company that's going to be successful 10,
Hmm.
20, 30 years from now. It's almost impossible.
We'd all be billionaires if
Yeah, we
we could
would.
do that.
And, we would go back and you see like GE was the biggest company in the planet in 2002, didn't really pan out well on an investment for 20 years.
Mhm.
So what we do is we can say, we can see what the next 2 weeks looks like, 4 weeks, 6 weeks, 12 months, even. That's pretty simple, right? That's within view.
Hmm.
So we don't try to, provide events that say these are for years. It's like, well, if you could make 10% a month each month of the next 12 months and do that again and again and again, you're going to kill it. You're going to crush it.
Hmm.
So we get, lots of different people who, some are doing 2 or 3 trades a day, some are doing 2 or 3 trades a month. And it will take them, 5, 10 minutes a trade between getting the alert from us, turning around, doing something with it. And we do have probably 5, 10% of the users that are using it just to monitor their existing portfolio for the same reason. They don't have time. So they
Hmm.
put in, here are the 30 stocks I own. Just let me know when something big happens. And then they don't read the news at all. They just, wait for the alert. And if something says, oh, they're doing a dividend reduction or this hedge fund is, short selling your company that you own, then you can get out of it quicker.
Yeah.
And likewise, you can see with the analytics, like how to play it, right? So Bezos leaves Amazon. Should I get out of Amazon? Or do I look at the system and say, when a CEO departs of a large company, yes, it goes down 2% on the first day, but typically within 2 months, it's actually higher.
Mm.
So this is a buying opportunity. So to avoid some of that emotional behavior that we all kind of are prone to as humans, reacting to our money, like disappearing, and we're like, oh, I got to get it out real quick.
Hmm.
And you can look at the data and say, well, the data doesn't show that. Data shows that 80% of the time, this stock's actually going to be up in 2 months. I'm going to load up. I'm going to buy more.
Yeah.
Gives you
That's
that
very
extra.
good. So, if a listeners out there say, hey, I want to check this out, and they go to levelfields.ai, what are they going to find? How do they get started when they click on your website?
Yeah, you just click, I think it's, log in or, go to the application. You
Hmm.
can put in a promo code that we use for podcasts like this. If you want to use podcast 23, you get a pretty significant discount. The word podcast and the letters, the numbers 23. And when you sign up, You'll be directed through a kind of onboarding flow. They'll give you a tour of the platform. You'll get a series of emails that kind of show how to use it on the platform. There's a lot of tutorials. There's a lot of help text that says, what is this type of event? How does it trade? You'll see, sometimes some ideal hold times on the event description itself. This is a 6 to 12 month hold time, or this is a 2 week hold time. And the numbers throughout will give you that indication that, okay, there's an 80% win rate for one day. There's a 70% win rate after 10. So, it's not really rocket science. It's all kind of laid out nicely. And then if anyone has questions or need extra help, we have a more premium subscription service where our analysts are actually sending out kind of the trade setups based upon the data that we see and saying, here's a good equity trade, here's a good option trade. It's a more expensive service, but it's like white glove. Everything's done for you. So you don't have to think, you just have to plug it into your brokerage system. And that particular service, amazingly, since we launched it, is up like 3,300% on the trade alerts. So
wow. Yeah.
we've been getting quite a number of interested hedge funds reaching out to us for some more information.
Yeah, because why create your own AI when they can also go to you and get some help, right?
That's right.
It's a win-win for everybody. Andrew, before we leave, is there anything else that I did not cover that you'd like to share to our listeners?
I would just say, if you're on a bicycle or you're at the gym right now, you may be thinking, yeah, this is not for me, but most likely know somebody that this is going to be a fit for, who might be using it for educational purposes or even using it, to trade. Just text yourself the name LevelFields.ai. Base subscriptions only a couple $100 a year, so it's well worth the price of admission.
Yeah, and for all of us, and here at the Richer Geek, we've always strived to inform people to diversify your portfolio, stay in stocks. But if you're going to be in stocks, this might be a better way, and than the financial advisors and some of the other ways that you do it. And you probably save a lot on the front end and the back end by doing it yourself and by using LevelFields. This episode, everybody, is brought to you by REI Words, your go-to SEO agency for increasing traffic to your website. Do you know what your domain rating is? Have you thought about a naturalistic, organic way to build your website and promote it through media and SEO? Check it out at reiwords.com. Andrew, it's been a pleasure, and thank you so much for coming on the Richer Geek Podcast.
No, likewise. Pleasure's all mine. Thanks for having me. Nice talking with you.
Thank you.